Hello everyone, welcome. This is a live streaming. It's like a preview of ECB later on. So if you allow me just to make sure that we're live and you can hear me loud and clear, and obviously share my screen as well. We are very keen to see and get prepared actually for today's session, right? So I will just hide it for now. Remember that this is your session as usual, so ask me anything you want. I will be here to reply to any questions that you may have. You're struggling to understand something, you have a question, fundamental related, technical related. I'm here to help, and this is your session, as I keep saying. So stick on the comments below, on the comment section either in YouTube, Facebook, etc. And we go through your question together. So before we start, just a bit of a preview of what is expecting later on today by ECB. Let me also, excuse me. So let me also share the euro dollar, which actually is the start today, right? It will monopolize the interest. Here we are. Perfect. Euro dollar, just on the big picture, as you can see, it has been in a clear uptrend since April. Hello, Chris. Hello, Godbit. Excuse me. The air conditions are so high. So, yeah, euro dollar. I had a very old line over here, as you can see, just to track a bit where we're standing after last year's peak. That's in the long term. Just to explain this line and the fact that we are seeing picking up around 60% of the losses that we have seen last year. Okay, so at the top of the ceiling, but that's long term anyway. So it has been 2 days in a row to the downside after posting and retesting once again the 109 territory, and because of of the latest euro dollar weakness, the past 2 days. And currently we can see that it's a bit unchanged. Sorry, let me drink some water because allow me. Sorry. Godbit is just in the long term. This is a daily chart. I'm just bear with me. I will just go through the fundamentals firstly. Okay, regarding the ECB, I will share also the calendar in a bit. Okay, but guys, ECB, we have basically it's close to the US session today. Okay, it's at 12 o'clock, 15 past 12 GMT time. So it's around nearly 4 hours from now. Okay, in nearly 4 hours from now, we're gonna have the ECB decision, and we're gonna see also the jobless claims later on and the ECB press conference. So what is expected today from the ECB, I think, is quite clear, right? Everyone is talking about it. It looks to be a done deal. So if it doesn't happen, it will got the markets out of a huge surprise. Okay, but indeed, the ECB is expected today to cut interest rates for the first time a while, actually, not following the steps of the Fed, and cut rates for about 25 basic points. Okay, so it's something that we keep saying about it. The members of the ECB, with their commentary, have pretty much confirmed it. But bear with me because it's important. It's still a very cautious cat. Okay, it is still a very cautious cat. and we expecting to see Miss Lagarde actually trying to keep all options open on the table for the second half of the year. Okay, so even though we have seen plenty of economic data improving, and that gave the confidence to the ECB to start easing. However, they remain cautious, they remain data dependent, uh, because they need to make sure that indeed inflation is coming indeed down. So there are still a lot of things that we need to consider, and to consider that even if they deliver this well anticipated cut today, if the data show don't continue their slowdown, okay, we might see a pause. So that's a different story. We can talk about it after today's meeting. But in general, guys, we have seen the economic confidence getting improved, consumer confidence as well, industrial and service confidence as well. PMI is also partially PMIs have shown a bit of a stabilization. They have stabilized a bit. Still, I think that's global situation. I think the still, for sure, in Germany and Europe, the manufacturing activity is still continues to contract, unfortunately. But and labor is still a difficult sector for Germany and for Europe as well, because we've seen that there is an increase in the jobless numbers. However, this is in line with the easing scenario. So that was indeed an argument for Dovish to proceed and to push further for the rate cuts. So the unemployment was key, which is something that is very, very important for the Fed, as well, as you already know, by following NFP, by following the jobless claims every week, and etc. So in general, the employment sector it might be actually the labor the labor sector and the manufacturing activity. They might be the two leading, let's say, indicators for the central banks to cut interest rates, and more precisely for ECB. We have seen unemployment rising. We have seen the wage growth be negative from 2021 up to the first quarter of 2023. And since 2023, so it's been more than a year now, we have seen an uptick, which is what it helps the inflation to come down, okay? Just trying to connect you the puzzle in order to understand how inflation could slow down, and is slowing down is because of the of the uh, uh, of the labor market, and more precisely in the case of ECB and Europe, is because of the wage growth that uptick, and this is a negative indicator for inflation. So inflation lowers down if we see an uptick in the wage growth, and also in general the higher labor cost tend to bring inflation lower. Also, retail sales plunged significantly in Europe, also something that brings inflation down. So have this in mind. So growth, a part of growth and inflation numbers. The other thing that the ECB is also watching is the impact that the so far rate hikes had for their for Europe. What kind of impact we have seen in Europe after this aggressive tightening of the monetary policy, right? How it impacted the growth, how it impacted the inflation outlook, okay? And in general, the numbers just to see, just to clear out what could be the central bank's strategy from now onwards. So that's pretty much it. What theoretically, okay, because uh, um, uh, the theoretically, as you know, any easing, any interest rate cut tends to have a negative impact into the country's currency, right? Depreciates the value of the country's currency. However, have always in mind that the markets are always ahead of themselves, right? And that's why we have seen all this move to the upside, okay? Actually, it was the dollar weakness. But nonetheless, it's just to explain first why we have seen this move to the upside for euro dollar. So basically, what we are seeing over here, instead of a depreciation of euro because of the upcoming rate cut, we have instead see that euro since the beginning of April, it looks to go stronger against the dollar. So dollar was the weak one, the second quarter of the year, right? And euro was the strong one against the US dollar. Why this happened? This is happening because of the fact that since the beginning of the year, I have a lot of have some questions. My best interest. Okay, we're gonna go through the pound yen as well. Don't worry about it. We're gonna go through everything. Instead, as I was saying, we have seen the vice versa, right? The reason is that it's not clear that indeed the inflation is coming down. And also, it was all that uncertainty around the Fed easing as well. Remember that we started the year with believing that the Fed will cut up to 150 rate basic points, and we end up with nothing so far. And not only that, we have seen postponing any action postponed until the end of the year or even in 2025. Okay, that caused a lot of uncertainty in the market. Um, so that's responsible for this uptrend that we have seen since April. And also from euro side is the fact that there is nothing clear, guys. Yes, indeed, they might proceed with the rate cut today. However, this is likely to be the last one this year. Why is that? Because there is a sign, there are some hints from the data that the inflation expected to be very, very volatile on the second half of the year. Okay, so basically, the trigger point will be the wages, once again, the labor market. So the last data that we have, they confirm that the wage growth and inflation are likely to remain volatile through the rest of the year. Okay, and that's why there is a lot of cautiousness, right? It is not clear that the inflation will continue to slow down. Okay. Nonetheless, it is what it is. We can see a clear uptrend, right? If you cannot explain it, just stick with what you see and not what you think. Okay? Just let me delete the previous line just to show you the support level, right? Support line over here. Let me zoom out a bit. That's a daily chart. Okay, we are in the long term for now. With sorry, with key resistance area at 109 is a key psychological level. The asset failed to break above it for the last so 4 months now. A very strong key psychological level. So that's the ceiling, and by connecting your lows, you have the overall support level with this trend line. Nonetheless, let's move down and closest to the intraday setup, just to help you prepare yourself ahead of the US session, ahead of the ECB later on. So as you can see, we have seen a decline. Uh, so far today, right? So once again, actually, basically, first of all, sorry, we have seen so far today euro supported, basically. This is euro dollar, so the decline suggest um, um, sorry, suggest a weaker euro against the US dollar. So we have a pullback with a bearish cross of the two intraday moving averages. So even though during the whole week, we could say, or basically mainly yesterday, mainly on the Wednesday's session, we have seen a bit of a support ahead of the ECB. Currently, we can see this pullback. Okay, and with the European stocks, as far I saw earlier, moving a bit lower. Okay, sorry. So we have a bit of a pullback, but as I said, it was quite well supported. So here we are. Let's put some lines on. It's a bit ranging since yesterday, right? Ranging since yesterday. And what is expected today is to proceed with that cat, so we could actually see a rebound back to 109. The possible reason about this reversal is on the anticipation of the ECB. You know that there is a lot of how can I say it? Practice of pressuring the related asset lower in order to let's say achieve a lower price. Okay, obviously this is something that represents the market sentiment right now, right? So mainly we are seeing a bit of a steady market in the bond yields. That's why the bond yields cannot really help us on the with the overall outlook of euro dollar. However, let's go through the technicals just to help you get ready for the ECB later on, right? So what we have over here. So it is important, guys, to bear in mind, okay, that we have today also the jobless claims. And it's very important to remember that today we have also, other than the press conference, also today we have, as I said, the jobless claims. And just a quick reminder about the ADP number yesterday. Okay, so it's a two events thing. It's not solely today about the ECB, it's also the anticipation of the NFP. That's why we have in general seen a bit of a mixed performance this week, right? Especially as we are getting closer and closer to the NFP. So you need to bear in mind also that the markets are also prepared for NFP tomorrow. So even though the ADP climbed yesterday, okay, so indicating that the climb of the ADP suggests a strong number, remember, a strong number for the NFP, right? So this is causing a lot of cautiousness ahead of tomorrow's NFP, and that's why we might see either no reaction later on the ECB, or a bit of a muted reaction, I would say, or an not in line reaction with the data. So bear in mind that the euro dollar might be more affected by the anticipation of the NFP, with the ECB being ignored. That's why focus on your technicals, okay? Focus on your technicals today, spot any immediate support and resistance levels, and just follow your chart. Trade what you see, not what you think, especially today, especially because ECB is just a day before the NFP. So we've been to the downside in the 1 hour chart, as you can see. This is a 30 minutes chart as well. To the downside, already below pivot point, with both moving averages pointing further to the downside. The two consecutive bearish candles with long tails at the bottom, indicating that even though sellers are in control, there is some support, at least the last 2 hours for euro dollar. Nonetheless, it is what it is. The immediate support levels is still at 108.70 and 108.60, which is in line with this area, this zone that I have highlighted over here, that held since Tuesday. Okay, Tuesday, Wednesday, repeated in Wednesday, and this is the next support level if we see the asset breaking and extending actually further to the downside. There is a lot of negative sentiment still. There is an increasing actually negative sentiment. The moving average, the indicator are still in line with further decline, okay? But it suggests that there is a slow increase of the negative momentum. So we need to have a confirmation over here whether it will indeed breach this bottom, or whether will stay and consolidate around 108.73. So bear in mind these key support levels. Obviously, if we see a breakout, a breakout of 108.70, that could trigger the attention to the next support levels. Now, okay. I would like to, I know that you're asking for the other assets, but I would like also to shift to the dollar, okay? Because it looks to be so far a dollar story rather than a euro story so far, the whole week, then the whole day, sorry. So here we can see that dollar is gaining some ground, okay, so far today. Basically, the bond yields are helping actually dollar and supported the dollar so far today. Okay. Um, so we have is the yields that are responsible for this move. Okay, we have seen actually yields holding up. Okay. Um, I think, as I read earlier this morning, more than 4% higher, the 10 year yield, right? Um, um, sorry. What I wanted. Yeah. So that's so. However, the yields. Okay, I cannot show it. Don't know whether I can find. Maybe I could share. Um, maybe I could share somewhere. Let me just trying to show you that. Okay, okay, found it. But I'm not sure whether you can see it. No, you can't. Let me. Oh, it was a very. Let. I just saw your question. Blessing. I just saw your question. Just a second. Oops, sorry. And I'm gonna share your question as well. Where's my screen? Okay. That's the 10-year yield from Reuters, 10-year bond yield. Okay. And that's the dollar, right? And it was a very good question about more blessing. ADP was lower than expected. Isn't that bad for dollar? It should be bad, yes, because it's like a signal that NFP might slow down. So this is could strengthen the odds for a rate cut from the Fed and so on and so forth. However, it wasn't. It was. Let me just show you the calendar as well, if I can. Where is it? So here we are. Here's the calendar as well, guys. Remember, where was it? Wednesday? Yes, Wednesday. Where is it? Here we are. Okay, here we are. It was indeed lower. Okay. Also, the revision was lower, 152%. You're absolutely right. It should suggest a weaker, indeed, um, a weaker indeed. Um, it should suggest that basically it could be a nice signal for a slowdown on the NFP tomorrow. Okay, but remember that ADP is not anymore, let's say, a very strong indicator for the NFP. It has repeatedly failed to be in line with the NFP number. Okay. So yesterday's figure about May follows indeed, let's say, firm, steady ADP gains. So we've seen this slowdown, let's say, since March, April, May. So this is the third month in a row. But it's still living a bit of some modest downside, let's say, risk for Friday's report. Remember that lately is not proven a strong indicator for the NFP. It had increased the odds of a downside risk, but not significantly enough to imply to imply a slowdown in the ADP. Significant is also it might be the jobless claim, might be the weekly jobless claim might be a bit more significant for NFP rather than the actual ADP number. What is expected tomorrow, guys? Okay, what is expected for the NFP is to have a bit of a moderate number. So what the markets are expecting, let me show you for tomorrow as well. Here we are. Where is it? Okay, here we are. We're gonna have a live. Don't worry about it. Tomorrow as well. So we are still, you see, there's still a growth is expected. 10K greater than the previous month. So an increase is expected. And actually, this is because of the weekly jobless claims of the both initial and continuing jobless claim, because we keep having a bit of a mixed signals. We can see that initial and continuing claims have increased, okay, but not significantly. Okay, that's why there is a modest downside risk. Consumer confidence is still mixed. Producer sentiment continues to fluctuate between below 50 mark. Okay, so the risk for payrolls tomorrow, that indeed downside, but still there is some cautiousness, especially for the revisions as the expansion matures. So what else I wanted to say about the NFP? Let's leave it as it is for now. Nonetheless, let's shift back to our charts. As you can see, since nearly the beginning of the week, since Tuesday, is a bit sideways, fluctuating between 104 and 104.30 territory, trying to recover the last 5 sessions above the pivot point, and there is still some an increasing positive bias for the dollar. As you can see, this is Heiken Ashi candles, by the way. We can see that there is still momentum to the upside. However, we need to see that break of the pivot point in the 104.20 territory. So any further breakdown in yields, here is what I wanted to show you earlier. Any further breakout on the yields, okay, could lead to a drop in the dollar. But as far as we don't see the yields breaking down, we don't expect the dollar to depreciate and to get weaker. So I know I talk a lot about the fundamentals. Let's go through the technicals now. Okay, let's emphasize on the technicals. Okay, dollar overall this week, actually since last week, it extends its declines. It retested once again the 104 territory, but we can see that is well supported so far above it. So bear in mind for the upcoming week that whatever happens today, whatever happens on NFP tomorrow, you should keep an eye on that level over here. more precisely, let's make it precise. The floor is the 103.90. Okay, here. If the dollar breaks that level, not just retest it, breaks that level. So let's make it lower. It breaks that level. That suggests the continuation of this downtrend, okay, and the continuation in general of this overall bearish market. For the intraday traders and short-term traders, use this. Oh, just use your channel, your regression channels, in order to help you spotting the support and spotting more precisely any rebound level, okay? Because a break of 104, okay, what it means, okay, sorry. What it means, come on, no, sorry for that. Let me put it again. Here we are, I want it a bit tight. Because a break, as I was saying, of the 104, a confirmed breakout this time, not just the testing, okay, not consolidating above it, not just testing it in the return back upwards, a confirmed breakout with the daily candle closing below it, or with your 4-hour candle breaking it and extending lower, okay, so use the 4-hour one. So if you see that, then that anticipate to suggest a breach of the bottom of the chart before a possible short-lived rebound. Okay, so in the case of a breakout of the 104, keep a look at the 103 level, which is the bottom of the channel. Obviously, a break outside the channel could trigger the attention further down. However, this acts as a nice retracement level, short-lived one, in order to post another a lower high, and so on and so forth. Okay, so you can use the body in the mid of the channel for your immediate support and resistance level. That's the dollar. Let me check your chart. Oh, sorry for that. Sorry. You are absolutely right. That was dollar. Okay, in a daily chart. Let's now go down to the 4-hour one. You can see that there is a consolidation, right? So pivot point and support level act as nice immediate support levels, breakout levels ahead of the Fed. Okay, so use them. Here we are. In the short term, the pivot point and a breakout above it opens the door to 104.40 level. On the flip side, the immediate support is at 104.05. And if we see such a sharp selling like this one, we could see what I explained earlier, the break of 104 and the okay, for this is for intraday traders, so the retest of 103.86 and 103.70 level. Okay, but if and only if we see a reversal of the existing trend down and a breakout of this support, but we need a strong high Kanashi candles such as this one. Okay, 2 consecutive no tail at the bottom, negative, trigger the reversal and the sell-off over here. Okay. Yeah, this is some consolidation over here. This is the next candle. Okay, it started bearish, but we have another 17 minutes to go until this candle close. But there is, it seems that this trend, uh, this trend has is run out of steam. So chart. Also take into consideration that, oh, Francois, join us. Do you want us to do a join live? It's a pleasure to have you here. So, also take into consideration that the ISM service PMIs have recently shown to be a much more significant indicator than the ADP employment rate report. You are absolutely right. Thank you, Ava. So, you see, guys, this is the thing. That's why we say we claim we stated a moderate as I said, non-farm payroll. So today might be more about an NFP anticipation rather than ECB. The markets are in line with the possibility of rate cut today for a long time. So they have comprehended already, let's say we could. So unless if ECB catches into surprise, but mm, mm. Um, please, guide, remind to put the overlap. Absolutely, David. Please, guide, remind to put your stop loss during the overlap time. Kenyan, who's in Kenya? Gideon, there is we have our offices there in Kenya as well. Oh, you're asking who is in Kenya from the audience? Okay, and I like the interaction between you guys. Okay, now let's get back to the euro. Sorry, to the euro. Uh, okay, so guys, as I said, it might be more of a dollar story than a euro story today and tomorrow, obviously. So there is a lot of consolidation, as you can see. Let me get rid of the support and resistance level. Let's focus a bit. Wrong. Pivot point, delete, close. Here we are. This is the 4-hour chart. As you can see, stalled. Overall, we had been into the upside, but momentum remains positive. But as you can see, MACD lines flatten. RSI holds above 50 as well for the whole May and June so far. So overall, we have not seen any change in the outlook of euro. However, you need to consider the bottom of the range and the top of the range as your immediate support and resistance levels for today. And let me just okay. Here we are. That is a bit of that is actually a dovish crossover here in stochastic. Let me confirm it in the 30 minutes chart. This is euro dollar 30 minutes chart. So there is an improved sentiment the last few hours. Okay, there is some support with the this is a very short time frame, by the way, 30 minutes chart. Okay, there is some support in stochastic bullishly cross. We have higher lossy stochastic as well. MACD stacks at 50. So what that suggests? It suggests that we might see a bit of a rebound, short lived for now. Okay, we might see a correction. Okay, just in the technical perspective here in the 30 minutes chart. So the next resistance level, it could stand at just around 15 pips, no, actually some just around 5 pips higher. Yeah, just 5 pips higher is the next resistance level, and the very next one is at the top of the day. So there is some improved sentiment in the short term. However, that's not the case the for our chart with consolidation, flattened moving averages. As the flat moving average continues, RSI is still flat. So just because it's a ranging market, you should have in mind to use your the top and the bottom of the range as immediate support and resistance levels. Okay, top and the bottom of the range. Let me use rock rate of change as well, just to see whether here we are. So it is positive. It is in the positive territory, but just 5 points higher. So rock is at 1 0 0 0 for oh sorry 0.14. Very weak. Very weak. Let's analyze it a bit. Yeah, very weak. Still, it just crossed zero, and by connecting the highs, it also crossed the crossed my trend line. That looks a bit like a divergence. Prices are rising up. This is the 4-hour one, guys. Okay. Actually, the top was there. No, that's in line. Sorry, that's not the divergence. So pull back, deep consolidation. So it's still in line. So you can monitor, you can use rock in your intraday setup just to spot whether indeed we're gonna see a rebound to the upside, or whether with the asset actually breaching or even breaking the next immediate peak of the rock. So if the rock moves up to 36, not 0.36, that would suggest some intraday positive sentiment, because it would mean the breakout of the previous peak, and it could imply to a positive momentum, to an increase in positive momentum, or whether we're gonna see another lower low that it leads to the negative territory and could trigger the attention down initially to 108 50 level, and next to the support of it here to the trend line that I have, which is around 108.20 and the round 108 level. Okay, use your indicators, use your support and resistance level. I mean, the top and the bottom of today's session, to spot some trigger points that will help you ahead of the PCB, because for the time being we have a pretty choppy market. I know there is a pullback, but look at that: flat RSI, flat MACD, flat stochastic, moving average have flattened as well. So stick on your support and resistance levels on the previous, or fractals, or whatever strategy you're using. Okay, whatever you're using, stick on the technicals, rely on your strategy, but make sure that you have done your homework and you have spotted sign immediate support and resistance level, that if to monitor whether they will be triggered ahead of the ECB or during the ECB. Nonetheless, let's move on. Yes. Please, I want to remember. Uh, Dollar strong. I was in the begin. These comments were in the were in the very very beginning of the session. Sorry, I missed them. Dollar index strong, but some there is a there is some sign of a reversal over here, my dear friend. So let's wait to see whether this rally has run out of steam. Gold, yes, for sure. Let's go through gold as well. Gold. Okay, so this is regarding the NFP. Sorry, let me just clear all these objects. Select all and just to have a clean slate over here. Close. Oh, okay, perfect. Um, okay, that's been it's been a while actually. It's been since last week, if I'm not mistaken, that gold is consolidating. Sorry, that gold is consolidating and pretty much stuck between the 23, let me be precise on that one as well, 23.15 and the current level, actually the 23.60 territory, which we have seen it retesting it and even break it earlier today. Actually, um, that was overnight. That breakout that was overnight, and it seems that is holding a move above it so far today, uh, signaling a possible exit of the so far ranging market that we have seen since the 23rd of May. Okay, um, so yeah. So the remember that the higher for longer stance from the Fed is something has been um, underpinning the yields, right? And it's keeping a lead on demand for non-yielding assets such as gold. Okay, so still, central bank, however, is keeping prices underpinned, and there is still investment demand. Okay, the investment demand for gold for non-yielding assets is still high. However, uh, however, there has been some how can I say it? There has been a bit of a strong ceiling so far today. Remember, by the way, by demand, it's not all about Fed as well. Remember that it's a lot of demand for the precious metal for China as well. Just bear in mind that demand is still supports the gold in general. So that's why we have, even though there was a bit of a dip, we've seen in general the gold being supported, and something that also is another positive um, factor for gold. Okay, is also the purchase also from the central banks, right? I think there was a report, I think it was yesterday. Actually, it was yesterday. Let me just check. Yeah, here it is. So there was a report yesterday from the World's Gold Council that reported that they have been purchased by global central banks. Um, there was there was an increase basically the last month in April, around 33 tons increased, so the central banks increased their purchases of gold by 33 tons in April. Okay, so that is what it helps. It supported quite well the gold, and is expected to keep it well supported in the second half of the year, if indeed the central banks continue their purchases. Okay, so yeah, sorry. So gold, that's a very important and significant breakout, guys. Okay, very important and significant breakout. And even though we've seen a pullback so far today, we need to keep monitor by the end of the day whether it will sustain this move or continues to consolidate above 2360, or whether it was just temporary, will return back to the 2340, 2330, or even 2314 territory. For the time being, the overall outlook for gold hasn't changed. Okay, it's supported, it's at record highs in the medium and long term, and the overall momentum still remains to the upside. Intraday now, intraday now, um, we can see that the moving average are ready to bearish cross. Okay, we have a pullback below the first resistance of the day. Stochastic and RSI are in line with this move. So there is some pressure, not significantly strong though, because RSI is still above 50, and Stochastic has already breached the oversold territory, suggesting that there is some room to the downside, but limited one. So overall, still well supported, far away from the pivot point. So by connecting the lows, you can see that no, the 20 period moving average remains intact, which is the mid level of the mid of um, the mid of the Bollinger Bands. There is some still selling pressure intraday in the very short term, but we might see the asset finding some support. Okay, actually, let me just make it, finding some support over here. Okay, so that's not it looks to be based on from the momentum perspective, just a correction for the time being. Okay, it could suggest a reversal if and only if we have consecutive candles, okay, consecutive candles below this area that I have put on. Basically, if the asset returns back to 2351 and breaks 2351 territory, that would suggest that it's back into the ranging market, and we might see this continue this consolidation over here. Okay, so this is a very important support zone that the asset is holding since the 29th of May. Yeah. Has already did an attempt to return into the range, okay? But 2350 and 2351, to be more precise, is it could confirm that it's back into the range. Yeah. The overall picture, as I said, is not really changing. Guys, feel free to put your questions on. I'm here to help, right? Remember that. Because I cannot see. Let me just check again. Good morning, Daniel. Hello. I'm in profit in euro and dollar on go for buy. Well done. Well done. Uh, I lost you, David. I lost you. What to take back? Don't worry about being late. Daniel stays, the live stays in the channel so you can go through it again. Philip, we have please contact your support team and your agent. Guys, this is your session. You can ask me anything you want. Please feel free to stick your question on the bottom of the live, on the comment section, either if you are in Facebook or even if you are in YouTube. We are already more than an hour live, so I will close the session soon. Just calling from some final questions. Just to sum up what I said, actually the majority of this live was mainly fundamental rather than technical. Um, as we have seen so far, as you know, it's all about ECB today and NFP, which is tomorrow. We have seen a bit of a weakness in the euro, and European stocks, as you can see over here, are surging higher and higher. Actually, that might be too. This is the DAX. Sorry, this is the DAX. So some significant buying so far today. DAX is at 18,740 currently. Sorry. Here we are. This is the 1 hour chart. But let me put my channel on. Sorry. So here we are. So far today. Yeah. Ready to break the uptrend. 18, the previous peak, as the 4 hour chart, the previous peak and today's high. It's today, right? Let me just double check. Actually, yes, today's high at 18,817 are it's a very, very important resistance level because it could could boost the asset higher up to 900s or even 1900s. Everything actually is ahead of the ECB today. So this rally, though, just to make sure that you understand what you're watching, this rally, okay, has been boosted mainly, okay, anticipation of the rate cut is positive for stocks and negative for euro. But this was also well supported by the technology sectors, which are continuing their rally, like Nvidia, Microsoft, AMD, and so on and so forth. Because we keep having some news out of technology sector, and this is helping the stock market in general, DAX, and obviously the US indices as well, S&P 500, Nasdaq, Dow Jones, and etc. etc. So Nvidia's performance, positive performance, and in general all the tech related firms have been to the upside And more particular for Europe, it was the ASML Holdings and the ASM International that surged to new record peaks, and that's why we have seen the European stocks surging higher. Okay, so it's more of it's also tech sector and tech optimism that boosted the stocks higher. So it's a combination of rate cuts and tech optimism that grows in general, the consumer confidence, why not, investor confidence as well. Um, um, yeah, so have this in mind. And especially Bank of Canada, I should say that Bank of Canada also help with this confidence that we're started easing, because yesterday they triggered that they're gonna have more easing coming, so that also helped the momentum. Guys, I cannot see any further questions. That's a final call. um it's not about advantage or disadvantage. It's whatever. Basically, you need to find the setup that you like, that fits your psychology, that you can understand. I mean, because not all indicators work for everyone, right? For example, I don't really like Ichimoku. It confused me. It's too many. I confused me. So, but it doesn't mean that this is for everyone. It's just me. I kind of like Haikenashi um, for dollar index especially, but in this case, it satisfied quite well the DAX as well. But it's you. It's your personality. Just try to find the indicators that you fully understand, and they help you easily to spot trigger points, to identify the momentum, to identify any breakout, whatever you want. Okay, you need to play a bit with your setup, try different things, different strategies, different indicators, different setup. Or you might not be an indicator person. You might be a price action trader, solely naked charts, solely focus on the candles. You might be that kind of person. So that requires time testing from your side until you find the setup and the strategy that works from you, regardless of what indicator I'm representing over here. The moving average that I had, I think the one that you have seen for intraday, for the intraday setup, it was the 5 and 9 exponential moving average. Okay, for the daily chart, I'm not sure whether yeah, so those ignore the daily moving averages. The ones that I have over here, now the ones that I presented so far today, those it's just for very very short time frames. 5 and 9 exponential moving average for 1 hour and 30 minutes chart. Okay, that's just for short term. It's the short term setup. I'm not quite sure what you mean by template. uh, my template over here, right, is basically what you, if this is what you mean, I let's say add everything that I want in the chart, right? I have the pivot points over here. I have the channel, I have stochastic and RSI. I have just right click, went to the templates and save the template with the name that I wanted in order to remember it. So if I click Heiken Ashi right now, you can see that it will quickly shift to Heiken Ashi. If I go back to the that's the long-term one. That's the 50 and 200-day moving average. So it's a daily and weekly template that I have. White intraday is the one that you were watching earlier with the 5 and 9 exponential moving averages, pivot points, stochastic, and RSI. So put on your chart whatever you would like, your setup, whatever you use, and just save it as a template. This is pretty much it. Save it, name it, and that's it. Okay? Guys, I'm going to call it a date if there are no further questions. So European stocks to the upside, euro dollar in a pullback, however, already stuck and steady at 108.77 level. Dollar has been to the upside so far today, but there were some signs of a reversal, and this is the very first sign, the very first bearish Heiken-Ashi candle in this 30-minute chart, indicating a reversal. So wait for confirmation, wait for further confirmation before you take any decision. Okay, that's not enough. We need confirmation. Yeah, so dollar also sideways for 2 hours in a row, failing to extend above 104.20, 25, 20, yeah, 20. And there is some so there are some signs of a reversal in the short term. This is a 30-minute chart. Gold sideways. It triggered the attention to the upside yesterday overnight. However, there is a pullback. So right now, already breached the 20-period moving average in the 1-hour chart. So the next support, as I said, and the very important support level is 23.51 level, which is coincides with the previous high, the support that we had earlier. Yes, actually we had yesterday, and also the trend line by connecting the week's bottoms. Okay, so there is a sign of a pullback, and further actually negative buyers in for gold, at least for the next few hours. So you can determine the accuracy, let's say, of a short leaf cross, because with if also your other indicators are in line with this signal. Okay, right now over here, for example, they are looking that they are ready to cross, but we don't have a confirmed cross, right? So the first thing that you need to have in mind is to wait for the cross to confirm. What I mean confirm? Like here, you see, they clashed. There wasn't a clear indication that they will continue. I mean, they will indeed cross and they continue to the downside. So confirmation came 2 hours, an hour later, right? So if we have a cross and we can see that the space between the two is getting wider and wider, this is a confirmation, for example, that indeed we have a bearish momentum in this 1-hour chart. But also you need to make sure that your other indicators, whatever you're using, not necessarily stochastic and RSI, are in line, or even your price action is in line with this. Okay, it implies the same. So over here, for example, we could have opened a position over here, right? Because we had a confirmed bearish cross. We have a decline in RSI, right? And at that level, actually, it was exactly at 50, but it didn't matter because there was a consecutive lows, and there were consecutive lows also in the stochastic indicator. Okay, so three things in line with the bearish cross. But as I said, it doesn't necessarily you don't necessarily need to use my setup, right? It's just use the ones that you usually use, you like to use, and just make sure that they give you all the same signal. If they don't give you the same signal and they give you mixed signals, then stay patient, wait for further confirmation. If you don't feel that you are confident with your potential trade, don't take it. Okay? Silver. Okay, last but not last, guys, the last um, silver has been a very, very interesting, for me at least, asset. Let me just, here we are. It's been, as you can see, that was a remarkable performance this year. I mean, more than, cannot even measure it. I mean, it was from $22, it went up to 32. There was a remarkable rally. A sharp sell-off indeed this week, actually started since last week. And it looks to me a bit of an M formation, which is bearish. Look at that. Dump. It looked like an M formation, which is bearish. But it was so overbought that there was the need of possibly of a correction. We cannot really tell yet, but it looks like an M formation. So it broken that M formation and extended lower. So remember, M, as I said, is a bearish pattern. Okay. So let me just also measure this. So it's already more than 40% down from the rally that we have seen. So reverted more than 40% of the rally that we have seen since April, the latest rally. With the M formation, you can measure, okay, the body of the M, because it could be useful to see where it could likely, how long it could, how much this decline might last. So by measuring the M, so it started here, the neckline goes around here, it's not a perfect measure, but just to, come on, approximately. So I measure them, only them, right? The beginning of them, right? And I will drag and drop it on the breakout of the neckline, which is here. So this is a potential support level. So the projection about the potential price movement, if and only if we see further decline. Okay, because today there was a significant bullish momentum that brought silver back to $30. Okay, so this is by using the body of the M, you can spot the next support levels in and only if we get another strong bearish candle with lower lows and lower highs. Okay, lower lows, lower highs. So don't. another strong bearish candle. In this case, the resistance level is just slightly for the moment above the today's high. So currently as 3061. Guys, I need to call it a date. Hopefully this helped you, dear Mazin. That was the, oh, I forgot to change the caption. Sorry. This is the end of our session. Thank you very much for attending. Take care ahead of the ECB today. As I said, markets might ignore it ahead of the NFP, so have this in mind. Stick on your technicals. Pay attention to the news. Have a news feed next to you just to keep monitoring the markets and what's going on into the global economy and politics, etc. And have a great day ahead. Take care, and we're gonna see you again tomorrow for an NFP live commentary. Okay, thank you very much. Have a great day ahead. Bye bye.